Good morning, trading world. It is February 22nd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook is On the Edge of the Cliff. And that is because we are either standing on the edge or climbing back up from a trip over the edge in overnight or pre-market. So be prepared to go over the edge of the cliff and sail our way down at any time. I have said this before in these market conditions. Support and resistance are not as important as the channels themselves. To me, a great trading plan will have a main thesis and an alternate thesis. Good traders realize that technical analysis does not tell what the market will do, but is more of a guide to what is possible based on the data points. And great traders are able to identify decision areas and pivot at these points based on how the data stacks up at the moment. Each thesis is based on probability of where we measure out to inside the standard deviations. And this is why I like to call them decision areas, because decisions still have to be made when we hit these areas. I say all this to prepare you for the back and forth that will happen in the coming days. It is best not to trade in the middle of the channels. Also, compared to all the selling we have seen, we have yet to have a real ripping rally. So if we do see one, don't be fooled into thinking things have changed and risk is not still to the downside. All right, let's get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side. Jack resistance is going to be the 433 to 435 area. And the queen resistance is going to be the 437 to 438 area. And king resistance is going to be the 444 to 450 area. On the support side, we have Jack support at 430 to 428 area. The queen support area is going to be 426 to 425 area. And the king support is going to be 418 to the 416 area. The battleground to go higher is going to be 439 to 440 area. If we can bust up above this 440 area, there's a chance we can actually take off on a ripping rally. Now, something I want to make everyone aware of is that our expected move levels, the upper end is around 446 and the lower end of the expected move is 421. The main thesis is bullish, closing above 434.23 with a projected high or possible target of 437 through 448. Our alternate thesis is bearish, closing below 434.23 with a projected low of 421 all the way down to 416. The current minor channel we are in is 443 through 431, and we did a lot of fighting pre-market just to get back up into this channel because we were much lower this morning. And a major channel being 453 all the way down to 425. Another thing to be aware of is that the next channel down is 425 all the way down to 416. All right, let's bring up the scenarios for today. All right, the first scenario that we have today is going to be an expansive range day type structure. And as always with these, there are a lot of different variations that can happen, but I will attempt to map out something that seems to kind of stand out to me, just to be prepared for. And what can happen on this expansive range day is we could set a decision area or our first boundary here at the jack resistance area, and then falling back towards some type of support before gathering and pushing through the jack resistance area, pushing that boundary toward the queen resistance area, and then bouncing back and giving another try and continue pushing the boundaries higher. But at some point later in the day, or at some point in the day, we could give a pretty good fall back, testing the lower boundaries set either earlier in the day or the lows of pre-market. So you want to be careful of that at any time, especially if you decide to be long at any point during the day, because we can reverse at any time. And when we reverse, we're standing on the edge of a cliff. And when you're standing on the edge of a cliff, if you get sucked over the edge, that fall is massive. So that is the expansive range day. Like I said, there could be many different variations. We don't have to start this way or end up this way. It could be vice versa. All right, that is the first scenario. Let's move on to the second. All right, the next scenario would be our rounded reversal day type structure. We could get a continued rally toward the queen or king resistance area and find our midday chop around either that queen or king resistance area before spending that same energy that we use going up to come back down the second half of the day. So that's the rounded reversal day structure, and a couple of the key things that help you identify the rounded reversal day type structure is also, number one, just taking off like a rocket from the cash open. And the next most important thing, whether you're looking at volume, whether you're looking at an indicator, or whether you're looking at internals, is divergence. While price action may be going up, whatever it is you're looking at, whether it be volume or indicator or internals, should be diverging from price action. And then it should be clear here after the maybe third or fourth intraday bar that you see where things start to diverge. And then even clearer during the midday chop section as we go sideways, you should see even more divergence. While price action moves sideways, you should see more of a downtrend on your indicators, volume, or internals. So those are key things to look out for on the rounded reversal day type. there is a vice versa warning on the rounded reversal day type. So there's nothing that say we have to continue up, but it is the most probable of the scenarios when it comes to the rounded reversal. But it is possible to see something like this being the vice versa reaction on the rounded reversal day type structure. All right, and now let's get to the last scenario. All right, the last scenario would be our trend day down, which means we would open with a gap to the downside, and once we get to the cash open, we would see some type of half-hearted rally to close the gap back towards the previous close, which is at 434.23, which is represented by the blue line here on the screen. And somewhere on or before the previous close, we should find resistance. And once we find resistance, that begins the rollover into our downtrend morning. And this would be the strongest trend of the day down here in the morning. We would find our midday chop area around either our queen or king resistance area. And then the second day would start with a head fake pushing down before actually or possibly turning around with a slight rally into the close. So that is our trend day down. It does also have a vice versa warning to where we could end up with the gap open, because we're very close to having a gap up, because we're trading pretty close or right on the edge of where the previous close was, so that if we do make it up here pre-market, we could get one of these and have us a uptrend, which would have the day look like this. This would be the vice versa warning on the trend day. So those are the scenarios for today. You must stay on guard because the conditions of this market are very fast and dangerous. We could switch momentum at any moment. With volatility elevated as it is up above 25, it tells me not to trust anything as far as a rally or direction, because things could change at a moment's notice. So with that, please, if you are taking positions, please define and know your risk and be comfortable with losing that risk or what you have out to risk. Because like I say again, things move very fast in these conditions. As always, I like to end by wishing you a successful trading day. Hope this helps. Have a great one.